I'm Gabby with Score Fort Worth, and today we're doing a mentor spotlight with Mark Lenz, a Score Fort Worth mentor. Mark, how are you today?
Good this afternoon. How are you, Gabby?
Not too bad, not too bad. Thank you for being with us today. Um,
Absolutely.
so, 2020, the year that never was.
Mm.
What should our small business mentors be thinking about to close the books on 2020?
Ah, talk to your CPA. The number one thing that every small business should be doing, if they haven't already started doing, is talk to their CPA and get advice on all of the things that affect your business relationship.
Absolutely. Those people should be your business besties.
Absolutely.
When it comes to year-end financials and taxes, tell me what our small business owners should be thinking
Oh, this has, as you said, has been a very interesting year. The COVID-19 virus has affected everything that we do from a business standpoint. And there are many new things that have to be considered when doing your taxes as it relates to COVID and the CARES Act.
about. So I think the first thing that we have to think about is if you were a business that took out a PPP loan, right? What should you be thinking about?
Now this has been one of the hottest topics of recent weeks, especially with regards to the forgiveness aspect of the PPP loans. Right now, the IRS is saying that the expenses that were forgiven are not deductible for small businesses that took out a PPP loan to the extent of the forgiveness. Basically, this means is what they're saying, since they paid those expenses and offset them 100%, you don't get a deduction for the expenses.
Gotcha. Especially if there is a reasonable expectation of PPP loan forgiveness, correct?
Absolutely. If there's not forgiveness, you can deduct every expense. But if there is forgiveness, the current guidance says you shall not.
Understood.
Again, this is not the end of the story because legislators are trying to see if this measure can be repealed so that there is taxpayer relief for these expenses. But we won't know that for some time, Gabby.
Absolutely, absolutely. Okay, and speaking of sort of tax relief, because this was confusing for a lot of our small business mentees, what does this mean in terms of payroll tax deferral? What should we be thinking about there?
Well, you've had several aspects of the CARES Act and a presidential executive order that have affected payroll taxes, primarily Social Security taxes. The CARES Act had a provision that said you could defer, not get permanent relief for the employee portion of payroll taxes from March through December. What a deferral means is you're going to have to pay those back if you took advantage of the deferral. So that needs to be clear that you get the cash flow for this year, which may be a saving grace to help you stay afloat, but you will have to pay those taxes back in 2021 and 2022 on a 50-50 basis. The
Gotcha.
president also did an executive order later in the year that said that the employee portion of payroll taxes could be deferred.
That's right.
This one's a little bit of a stickier situation because we're talking about employee money, not employer money.
Ah, that makes sense. That absolutely makes sense. Okay, so talking about employees and still under the CARES Act, what about employee retention tax credits? How
Right.
are small business handling those?
Sure. This is something that is out there for people who really either didn't apply for a PPP loan or were rejected for a PPP loan. Under this provision, companies can get a tax credit for up to 50% of certain payroll taxes paid, again, from March through December. This is based on, again, specific rules in the CARES Act, and you should speak to your CPA if you haven't already done so. Many companies that were going to take advantage of this will have already done so, but part of these things are retroactive. So even if you didn't take advantage of them, there's the possibility there's some retroactivity that you can use to get some more cash flow.
Good to know. Good to know. Those are big, big pieces. And again, like you said, right, talk to your CPA and attorneys to make sure that as well as the standard things that you think about, like NOLs, right, and time and income and expense.
Exactly.
You got to factor those in.
Yeah, the NOL is very interesting for this year because, again, the CARES Act did something extra to help put money into small businesses' pockets. Under the 2017 Tax Act, there were no longer NOL carrybacks. You could only carry net operating losses forward to offset future taxes. Because of the pandemic, the CARES Act allows carryback of losses for 5 years. So if you were profitable in the 5 previous years, you may be able to get refund of cash that can help you stay afloat in the midst of the pandemic. So again, your CPA will be able to speak to you about the specifics as it relates to your business.
Sounds good. So again, this has been Mark Lenz, a mentor with SCORE Fort Worth. And if you should find yourself needing help with figuring out how your business is going to work in 2021, feel free to give us a call. Mark, thanks again for being with us today.
You're welcome, Gabby. I enjoyed it.
Likewise.